In this presentation, we will record the purchase of furniture and investment in financial investments within QuickBooks Pro 2019. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in the home page. We have the open windows open. The way to open the open windows is to go to the View tab and go to the Open Windows list. We are going to start off by entering an investment into financial instruments from Vanguard. Vanguard is going to be the institution in which we're going to invest some of that money that we have now put into the business and put it into financial investments until we use it for the purposes of the business. So we're going to take some of our money out of the checking account, put it into something like stocks and bonds for a short-term basis. Now, this is another transaction that's not going to happen all the time. In other words, we're not going to have a daily type of transaction where we're going to be putting money from our checking account into financial investments unless that's what our business does for business. We don't do that for our main purpose in business. Our main purpose, our main goal, our main generating function is going to be to buy and sell guitars, and therefore this is not something that's going to have a form related to it specifically for that reason, because most of these transactions, they go through the vendor section, the customer section, the employee section, deal with things that do happen on a systematic, periodic basis, and therefore we're going to have to enter this in some other format. Now, anything that deals with cash, as this does, it's going to go from the checking account out. We can typically use the register. So that's what I would use most often. We could also, use basically a check as well. I prefer to use the register. So we could use the register by going to the check register over here, or we could use the drop down. I prefer using the drop down because the drop down is there no matter what page we are in, even if not in the home page. So I'm going to go to the banking up top, and we're going to select that drop down. We're going to go to use register, and make sure it's on the checking account. That's the one we want. That's the register we are looking for. And I'm going to say OK. And here's going to be our register. Now we're going to enter this as of 0104. 19. That's going to be the date that we'll enter this transaction as of. Then we're going to have the check number here. Now, once again, it's going to generate a check number for us automatically. But when we first start, of course, we don't have the checks in the system. So it's going to name check 1, which not normally the types of check numbers that we would be having. Now, note that if we put money into Vanguard, we possibly would most likely do that with an electronic transfer. But I do want to enter a check now so that we can see what that system would look like. Note that if we were to write checks through the system, there's two ways we can do it within QuickBooks. One is we can use QuickBooks just to track our transactions and actually write the checks outside of the system, in which case we want to make sure that we have the right check number. We write the check outside of the system, and then we enter the data into the system either at the point in time that we write the check, which is best, or at the point in time that we get the bank statement, because we're going to get the bank statement and enter that data into the system. So we want to get that stuff into the system in some way so we can make the financial statements for our records and whatnot. So even if we're a small company, we want to make sure to get the information into the system. When we write the checks, we can enter the number into the system as we go, or we can do it from the bank statement. Now, if it was an electronic transfer, we would probably have it on the bank statement, or we could check the online banking and get it from that location. We're going to say this is our first check, and I'm going to name the check 1001, and that'll be the first check basically in our checkbook. After this point in time, all the checks should then line up after that, and we shouldn't have to enter any more check numbers. Note that whether we print the checks out of the system or we have the checks outside of the system, meaning we do them manually and write the checks and enter them in here, we are still going to have pre-numbered checks. In other words, even if we put the check into the system and printed them from QuickBooks, it does not print them on a blank piece of paper, but has pre-numbered checks. And that's one of the major internal controls that we're going to have. So we want to just be aware that these check numbers are going to be necessary whether we print the checks from QuickBooks or not. So then we're going to enter the vendor. We're going to say it's from Vanguard. Vanguard is who we are investing in. That's just one company that could have investments in for things like mutual funds. I'm not promoting them or anything like that, just using them as an example here. So I'm going to type them in here, and we don't have them set up because it's the first month of operations, 1, and 2, because it's not like a typical transaction that we will have. So I like to actually type the name in there, and then when you hit tab, it's going to ask you, do you want to set it up? Now we could set it up once again as the full setup where we write all the information about them, but we probably just need the quick setup. I just want the name so I know who to write the check to in this case. So I'm going to have the quick add. We're going to use the quick add, and it's going to be a vendor, customer, employee, or other. Again, vendor doesn't really fit. We're not really paying for a service, although you can think of it as kind of a service. So you could keep it as vendor, but it's more like we're putting it into an investment account similar to like a checking or bank account. We're going to put it into other in this case. So we're going to say OK. And it's going to be a payment this time, which is a decrease to the checking account. So we're going to be on the payment side, and we're going to enter that payment of, we're going to say 12,000 is going to be paid. I'm going to say tab. Now we just need to enter the other side. What's the other side going to be? Now this is going to decrease the checking account. The other side should be some kind of asset. So if we go up here, it should be up here. If I look at my assets, we've got these items here. Nothing in here looks like appropriate, right? Accounts receivable, inventory, undeposited funds doesn't look to be correct. So what we're going to do is add one here. We're going to say this is some type of investment. Now the name that we added could vary. I'm going to call it Short-Term Investment. Now we might want to make it more specific, calling it something like Vanguard Investments. And that could be useful for us if we're using these financial statements personally, because then we know exactly what we're doing. We might call it Short-Term Investments / Vanguard or something like that. When we make the financial statements, however, if we're giving them to somebody else, typically this is more kind of the name that we would generically have. Also, if you have multiple investments, you might want to, you could break them all out on the with different account names. You could break them all out with different account names. And again, that's good for tracking, but it's not really the way you want to format the financial statements when giving them to another person. So putting all the financial statements, basically all the information into short-term investments is kind of like the grouping category that would make most sense when making normal financial statements. Another option you could have is to use subcategories if you have multiple investments, and that way you can have multiple investments under a subcategory. So as we set that up, we'll take a look at that in a little bit more detail. So I'm going to name it Short-Term Investments and then select Tab, and it's going to say, hey, we don't have that account set up. Do you want to set it up? We're going to say, yes, we do. And the default option when we're in the check register will be to set it up as an expense type account, which isn't correct here, usually will be correct because most of the time when we write a check, it is an expense. In our case, it's not an expense. What we're going to be putting this account to will be an asset type account, and we're going to put it into other current assets, not a bank account, similar, but we're going to put it into the other current assets. And it's current because we expect we're not putting it in there long term. We're not investing in it for a long period of time. We're putting it in there as a holding until we know what to do with it. And note that with most businesses, unless we're doing financial services, we are not putting money into the business in order to hold it. If it's a small company, we put the money into the business in order to invest in the business. In our case, in the business of buying guitars. So if it's in the company's file, it shouldn't be really for long-term investments. If we want to invest in a long-term investment for a long period of time into something like mutual funds, we would typically take the money out of the business and then put it into those funds personally. So just a note on how we go. This is just going to be a holding account for us until we use the money that we put into the business for company use. So we've got the account here. It's going to be the name. We could put a description down here. Note that here's the subcategories. So if we were to want to list out all the mutual funds perhaps that we put money in within Vanguard or something like that, we could make a master account called Short-Term Investments and then a bunch of sub accounts that would be related to that. And the benefit there would be that when we go to the financial statements, we can either present them with the sub-accounts not showing, it all being in the master account, in other words, for people that don't want a lot of detail, or we can show the sub-accounts and see that detail. So that's one way that you can kind of get the best of both worlds, is to use these sub-accounts. It can get a little confusing though, and you got to be careful on how many accounts you want to create, because the more accounts you create, the more complication you have in the accounting system. So I'm going to keep that. Again, no description. We're not going to be doing the tax code here. We're going to just say save and close. And there is our information. I'm just going to call it the memo short-term investment. Now remember, you have to hit record or select enter in order to finish this transaction. So we're going to record it and it'll beep at you, and then that'll be it. Now it jumped up here because it jumped up by date order. And I'm going to say we did that on purpose, but we didn't really do that on purpose. I'm going to go back. These two items here, I'm going to change that date so we're in the same order when we're doing the transactions. I'm going to say that this happened on January 1st. Now in QuickBooks, you can go back in here and adjust these after the fact. You could question as to whether or not you should. The proper way would be to void these and enter them back in. But again, the ability to change the dates is something that you have within QuickBooks. And you want to be careful, especially if you change the dates prior to the month you're working on. So if you're changing dates within the time period you're working on, probably not too big of a deal. If you're changing the dates to something like last year to this year or something like that, probably something you want to avoid. In this case, I'm just going to change these to, instead of the 10th, we're going to adjust these to 01. So I'm just going to click on there and adjust it to 01 and record. And it is incorrectly formatted. So what did I do? I'm going to change it to 010119. 010119 and tab, January 1st, 2019, and then enter, and we're going to change the date. And then I'm going to do the same thing for this other one that happened on the 10th. I'm going to change that to, I'll just do the whole thing again. So we want to change it to 010119, and then enter, and yes. And it is going to retained earnings, so that's okay. I'm going to say okay. So now that'll put us in order. So this is our beginning balance. This is what we did for the loan deposit, owner deposit, and here's us putting some money into the Vanguard. Let's check the financial statements and see if this does what we would expect it to do. We would expect it to reduce cash and put the other side into another asset, short-term investments. We're going to go to the reports up top. We're going to go to the finance company and financial. We're going to go down to balance sheet. And then we'll change the dates to 010119 tab. Let's change it to 12/31/19. So the end of the time period. Here's our checking account. I'm going to double click on the checking account, and that'll zoom in. I'm going to change this beginning date to 010119. So it's for the entire year. And then here it is going out of the checking account. If we double click on that, zooming in it, we can see that we have then a check basically that has been generated here. So once again, it doesn't take us to the check register where we entered the information. It's going to basically drive these transactions by the form that QuickBooks sees most applicable to what we did. We entered something that's going to decrease the checking account. QuickBooks sees that in essence as a check, and it is a check because we assigned a check number to it, of course. And so this will be the transaction we have. We can see it in the check register, and we can see it by form. I'm going to close this back out. The other side, it's going to go to short-term investments. We can see it in the split column. We're going to close this and check that out. So short-term investments should be an asset. It's an other current asset. Here it is, inventory. Here it is, short-term investments. So that 12,000, I'm going to double click on that. I'm going to change that beginning date from 010119. And there it is. So here it is, our 12,000 there. If we double click on that, once again, you see that check. So we'll close this and close this. What happened then? Checking account went up, assets went up, no effect on the income statement or profit and loss account. because all we did was basically take money out of one asset and put it into another asset class. Next thing we're going to do is take some of that money and put it into an investment in furniture and equipment, a fixed asset. We're going to buy some fixed assets with this money that we've been putting into the company to set up our store, our equipment that we're going to need. So I'm going to go up here to the home page once again. And what we're going to do is put money into the business. Now, we're going to purchase furniture and fixtures. Once again, this is something that we do at the beginning of the business, but not something we're going to do all the time. We're not always continually going to be buying furniture and fixture, and therefore there's nothing in these forms that really drive this transaction typically. Now, if we're paying it just with cash, as we will here, then it's going to be something that we can do with a check, or we can put it into the check register. And I'm going to go with the check register again. So we're going to go to the checking register. It's over here on the left, or you can find it in banking, use register. And then we're going to be in the checking account and say, okay. All right, now we're going to enter the next transaction. It's going to be, we're going to say it's on 010921. So January 9th, 2019, 010919. The year we're working on, January 9th, 2019. So January 9th, 2019. Okay. So the check number is now generated automatically. So you got the 1002. And now we're just going to put who we're purchasing from. We're going to say Office Depot. And note that this automatic generation will happen now as we go. So we're going to say we're writing another check. We're imagining here that we're going to write it by hand and then use the check number from the system as we enter it into the system when we either get the bank statement or when we enter this information into our system as we write the check. So here we go. We got Office Depot. We're going to say tab. And we're going to add this here. So this is the first time we have set up or bought something from Office Depot within the QuickBooks system. Again, I don't need the full setup. I don't need to know everything about Office Depot. I don't need to know all their information. I'm just going to have a quick add. I just need the name that we're going to put on the check. Now, this is actually going to be a vendor. So a vendor, this is someone we're purchasing from. So we're going to keep it at the vendor. Say OK. We're going to put 16,000. We're going to be investing in equipment. Guitar equipment and office and furniture and whatnot. And so we're going to then put it into the account. Now the account has already been made up even though we've not used it yet because we used the preset chart of accounts. So every time in the first month what you want to do is select the drop down and say, is there an appropriate account? If there is, use it. If there isn't, make up a new one. If you don't like the name of the account that's being used, but there's a pretty similar account, then use that, change the name. So in our case, we're looking for an asset because we're putting stuff into equipment, and we're not going to expense it because we haven't, we haven't consumed it yet. We're going to be using this for a long period of time. So it's going to be a fixed asset here. That's what we call furniture and fixtures. It's going to be a fixed type asset, and there's furniture and equipment is the one we're going to use. Now, if we were buying like guitar equipment or something like that, we might want to label it something differently. We might want to custom label it. And put it in there as, guitar equipment or musical equipment or something like that, or just equipment and not furniture. We may want to break out furniture and equipment. So you want to think about these categories as one, they're set by QuickBooks, so they're probably fairly standardized. But if you want more customization, you got to find that happy medium between customization and the standard kind of categories that would be used and probably would be most familiar to say a tax preparer when we make these financial statements for tax preparation at the end of the year. So I'm going to use furniture and fixture, and we're going to say the memo will just say purchase furniture and fixture. Furniture and equipment is what they're calling it, not furniture and fixture, but we'll say purchase furniture and equipment. Now we might want to put in the memo exactly what we purchased, possibly some more information here. Any more detail in the memo is nice to have within the memo. So then we're going to record it, make sure we do record it before checking to see if it does what we expect it to do. So we're going to go ahead and record. We see the payment here. Now, what do we expect it to do? The checking account, we expect to go down to this amount. And we expect the other side to go into an asset account, furniture and equipment, not an expense, not on the income statement, an asset. So we're going to go to the balance sheet in the open windows and see if that is indeed what happened. Here's the checking account. Looks like the proper balance. Let's double click on it. Change that first date to 01/01/19, January 1st, 2019. Refresh by clicking down here. And we then see there's the 16,000 decrease in it. So see this nice running balance that we're going to have in the transaction by account. If we double click on that 16,000, there it is here. We see it is a check. Doesn't go to the check register. It goes to the form that QuickBooks sees, and it'll generate our check number and date there. Closing this back out. Closing this back out. We can see the other side then. It's going to go to this account in furniture and equipment. So furniture and equipment, if we double click on that, we're going to say tab 01/01/19 and double click down here, and that'll refresh. Now if you don't have the refresh setting on, you can refresh up here. It'll go refresh, but if you said refresh automatically, then you just need to click down here to refresh after you've changed the dates. And so then we have the Office Depot 16. We started off with 75. That's what we had in our beginning balances before we started. Here's the check. Here's the 16. If we double click on it, same check. So those are the two sides. Now you might be asking, why is it going to, I'm going to close this and close this. You might be asking, why is it going to an asset here? We took it out of one asset, put it into another asset. Why is it doing that? Why didn't it go to the profit and loss? Why aren't we expensing it, in other words? And the reason is that we haven't used it yet. So we're going to expense this as we use them. If it's equipment, if it's large things that we're going to be using, if we're buying equipment that we're going to use for a long time, we will expense it, but we can't expense it all now. That'll distort the financial statements. It'll make it look like we did really bad this month compared to next month because we'll have this big expense. What we'll do instead is we'll depreciate it, and that's what we'll do in the adjusting process. We'll talk about how we expense this over time with the concept of depreciation. Okay, so we're going to do this one more time, and this time we're going to purchase furniture and equipment, this time using a check. So I'm going to go back to the home page, and we're just going to write a check this time. We could write it from the home page, go into Write Check, this form. It's in the banking section. Or I like to use, once again, the drop downs. So if I go into the banking up top, and we go into the Write Checks, which is going to be the first item here, this will be the driving form for us to write the checks. Now, if we're in a process where we're entering the checks into the system and then printing the checks from the system, this could be a useful way to go. If, on the other hand, we're just entering the checks into the system to record the information into our system, but actually writing the checks by hand in some other fashion, then the check register is probably an easier way to go. So we're going to go to the Write Checks here. Now the first thing we want to note that if you are writing the checks from the system, you're going to buy the checks from the bank that you're going to put into the printer and then print them from the system. If we had this item checked, we're going to print them later. If we check that item, then this check number will disappear. Meaning if I uncheck that, it's giving us the 1003. If we're going to print the checks, we can say, okay, I'm going to print it later so that it'll say to print. And then we can basically print all the checks that have not yet been printed by putting the checks that are pre-set up, the pre-formatted checks, into the printer, and then printing the checks and assigning, it will then assign the proper check numbers. And that gives us another kind of internal control by the check numbers within the system should match up to what is being automatically assigned. If we're going to be entering the checks manually, like we're going to write the checks and then enter this information into the system, the check number will then appear. And again, we want to make sure that that checks out to what the check number we have is. And in this format, again, I would typically use the check register if that's the format that we are using. But this is the form, of course, of the check. So we're going to say that this happened on January 11th, and we're going to add a new vendor again. I'm going to say this is from Amazon. And so Amazon, again, we probably wouldn't be purchasing from Amazon online vendor with a check, but we're going to be practicing putting the check in there at this time. So we're going to say Amazon, and it's a new vendor. So I'm going to select tab, and we're going to say set up. Once again, I don't need to know the details of Amazon. I don't need to know the whole setup. I just need the name. So I'm going to say quick add. It's going to be a vendor. So we're going to select the vendor and say OK. And that's all we need. So we're going to say that the amount is going to be $7,000 that we're purchasing from Amazon. And again, we're going to put it to that account, furniture and fixture. So note, same transaction type that we have here. We're buying furniture and fixture with a check. Now using the form rather than the register. The form itself means that the checking account is going down. That's what a check means, of course. We're going to decrease the checking account. Then we need the other side to the transaction, which will be in the expense tab or the items tab. We'll see the items tab later. We're going to be working in the expenses tab, which is deceiving because we don't always record expenses here. The only distinction here is we're not going to be recording items, inventory items. So over here, we're going to have the expenses. In our case, it's not an expense, it's an asset of furniture and equipment, but it usually would be an expense when we write a check. So if we select the drop down, we're going to look for that furniture and fixture. It's going to be asset up top again. It's going to default to the expense area because that's what it thinks we usually would want. But here we have a rarer purchase, a purchase that doesn't happen every day, where we have a big purchase of furniture and equipment that we're going to capitalize as an asset as opposed to an expense. And then again, we might want to put a memo here. Purchase furniture and equipment. We might want to name the purchase and put some more details of the purchase. Good details within the memo are nice in case we have to go to it for an audit trail. And then we're just going to say save and close. And that should do the similar transaction. So if we go into the balance sheet, we should see a similar transaction as we did when we purchased furniture and fixture using the check register. So I'm going to go to the balance sheet in our open register. It should refresh automatically. If it doesn't, select refresh. And then we're going to go to the checking account. I'm just going to double click on it and change the beginning date to 01/01/19. And then there's that 7,000. So that last transaction, if we zoom in on that, double click on that, we'll see the 7,000 here, and there is our check. Closing this back out, closing this back out. The other side, of course, will be in the furniture and equipment right there. We'll auto zoom on that and see the other side. Change the date 01/01/19. It's 09/19. We don't want to go down to 2009. So there's the other side of it. So the equipment is going up here. So same transaction, different form. When we select either of these, it's still a check, although we entered them in two different formats. One into the register, two into the check form itself. QuickBooks sees it as a check and will go to the form once it's been entered whenever we zoom in on it. However, of course, if we go to the check register, if we go to banking, use register, and OK, then we'll see that check appear here as well. If we want to see that check from here, the form, we double click on this item. There's the check. So this is the driving form that QuickBooks uses no matter where we basically enter, whether we enter the form or into the register. For more accounting information and accounting courses, visit our website at accountinginstruction.info.